And today, of course, I want to talk about this pattern, and it always leads to a bull run for Bitcoin. Now, what about that $30 trillion? What's going to cause $30 trillion to come into the space? Am I making it up? Well, no. I saw this. This is coming from a Bloomberg ETF analyst, okay? So this is coming out of Bloomberg. A lot of you guys have heard of Bloomberg and a Bloomberg terminal, right? I mean, this is coming straight from one of their analysts that claims that once we get a Bitcoin spot ETF and once we get more, 30 trillion will flow into cryptos, okay? That's a large number, okay? The ETF, to quote, the ETF is the format that boomers and financial advisors prefer their investments to be delivered in, meaning the older generation and the wealth advisors and financial advisors, the institutions, they rather just buy ETF than deal with physical or real Bitcoin because there's a lot of things to worry about. They rather just buy an ETF, right? So that makes a whole lot of sense. Now, according to him, before BlackRock's application, he thought there was only a 1% chance that a spot Bitcoin ETF will be approved. Now he thinks it's more like 50%. And to quote, these are very smart people and they don't just apply on their own. They're clearly seeing something they think they could get through the regulators. Again, we're talking about BlackRock, the largest asset manager on the planet. So that makes sense. They're not just going to keep applying to get rejected. They're working their magic behind the scenes, pulling the strings. And Gary probably received a call or two from Larry Fink saying, hey, you need to make this happen, right? So $30 trillion sitting on the sidelines or from other investments that could potentially come in to the space just from spot Bitcoin ETFs being approved. Massive. Keep in mind, the entire crypto market cap is barely over $1 trillion. Now you times it by 30 and it's actually even higher than that because as people FOMO in, there's going to be leverage, there's going to be all this stuff. I mean, it's going to be wild. As for on-chain metrics, right? A lot of people are still looking at on-chain metrics, trying to study it, trying to figure out Bitcoin's next move. Right now, it does appear we are in that accumulation period once again, which is why Bitcoin is so solid, so steady, right around $30,000. That's okay. That's okay. This is part of the metric that shows we're at the same equilibrium point as 2016 and 2019, right before Bitcoin started heading higher. Okay, what is the equilibrium? Well, about 75% of supply is in profit right now, and 25% is in loss. So vast majority of Bitcoin holders right now are in the green, right? But whenever you have the 75 to 25% balance, that's when things start moving, okay? Back in 2016, Bitcoin was only $425. Back in 2019, Bitcoin was only at $6,500. And right now, at our equilibrium point, we're at $30,000. So think about that. Remember, every cycle, we form higher lows. Okay, so for people that are panicking about 30,000, just remember, 2019, we were as low as $3,000, and the cycle before that, 2016, and 2015, in fact, we fell to $160. Okay, so Bitcoin is definitely gaining strength every single cycle, and I don't believe this is going to stop, especially with all the institutions that are jumping in. This is also another pattern. I mean, there's a lot of fractal patterns, okay? There's a lot of moving averages. I show these basically every single day, but that's the situation we're in right now. This is also why I'm so bullish, because like every single thing that you can measure, from the growing fundamentals to the on-chain metrics to the technicals, everything you measure is looking fantastic for Bitcoin. I don't see how anyone can be bearish at this point in time. Even the macro environment is getting better too. I mean, and we're going into the halving. I mean, there's so many reasons to be bullish. But anyways, here's a technical pattern. If you look at 2015, 2019, 2023, where we are now, you have a bunch of EMA lines, right? That basically it's a ribbon of EMAs, moving averages, and Bitcoin has just broken above all of them. And the last two times this has happened, the most important thing about this is it's irrelevant what the moving averages are, right? All these ribbons have some kind of, EMA 20, in this case 26, or the 10 and a 5 or whatever. The important thing to know is when Bitcoin breaks above these ribbons, it's generally very, very, very bullish. And it doesn't happen very often. It's not like it happens every other day. You look at 2015 when we broke out, that's when Bitcoin went all the way up to 20,000. When we broke up from the bottom of 2019 and went up to 14,000, right? And then from 2019 all the way up to 69,000. So we have just broken above again. So that means we're starting a bull run, right? We have already started. And where will Bitcoin end this time around? 200,000, 250,000? We'll just have to wait and see. But it's definitely worth waiting for. Here's another one. Measuring bottoms for Bitcoin. This is using the cost basis analysis. And whenever, it's very obvious, whenever you have this green spectrum or shading, right, that's when Bitcoin is at its low point, right? And then whenever we break out of it, the red lines is when we have peaks. Obviously, we're nowhere near a peak. We are out of the bottom and we are recovering. Take a look at this. Will Clemente tweeted this out. I mean, this is pretty obvious. So whenever you see DXY, which is the red line, goes up, you know what happens in Bitcoin? It tends to go down. And when the DXY goes down, guess what? The opposite happens. Bitcoin goes up. It's actually, I mean, there's a lot of up and downs, yes, but overall, if you look at the bigger trend, that's what happens. When the DXY goes up, generally speaking, the economy, markets are spooked and people are flooding into the dollar, which if you think about is really silly considering inflation and devaluing of your purchasing power. But whenever people flock to it, that's usually an indication of some kind of major event or recession or something that's happening, right? So if you look at, DXY was pretty high up. With 2022, 2023, now starting to come back down, right? I mean, if you look at the peak in 2023, or 2020, 2023, I don't know where it peaked out at, if it's this year or last year, but you look at it, that basically correlates exactly with the bottom of Bitcoin. DXY going down is always a good thing, and I would argue having too much cash is never a good thing. So it's good for DCAing, good for dollar cost averaging. But if you have everything in cash, over time, all it does is, again, devalue your buying power because the governments keep printing more and because inflation also does that too. I mean, there's a lot of factors at play.